Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and Palantir Technologies PLTR stock. We're going to be going over the latest news updates and price targets for both of these companies, and for Sofi Technologies in particular, we're going to talk about why the overall stock market is falling, but how recently Sofi Technologies has had some gains recently. Then after that, we're going to talk about and discuss if Sofi Technologies is still a good stock and company to invest into despite the current negative stock market environment. From then on, we're going to move on and talk about Palantir's PLTR stock, and we're going to talk about why professionals believe that Palantir and their PLTR stock has around 26% upside left inside the stock over the next few months, which means we could see the stock price surge pretty aggressively. So I will give my thoughts and opinions on that. We're also going to talk about how Palantir actually has partnered with a healthcare company named Concordance Healthcare, and how this is absolutely a huge partnership that is going to help their medical supply chain ecosystem, and we will be diving into that story, talking about Palantir as well as how they're going to help out Concordance, which is an absolute gigantic deal. So for more videos on Sofi Technologies or Palantir Technologies, please go and smash that like button right now so I know what videos you all want more of, so I can start to make them. Also, I want to say that in our next video, I will be talking and going through how I beat the S&P 500 and the overall stock market in my investments, and how you can too. How to beat the overall stock market or any other investor that you probably know who's a retail investor and not a professional investor. So if you want that video, remember to go and comment down below that you want to see that. Subscribe for more news updates on the stock market, and without further ado, let's just get into it. So we're going to start off talking about Sofi Technologies SOFI stock. Sofi Technologies, if you didn't know, is a fintech company or a financial technology company that basically operates as a digital bank. They offer their consumers an all-in-one inclusive digital app which gives them access to various financial services and products. Currently, the Sofi share price trades for around $5.17 per share, while investors and professionals believe the company should be worth anywhere between $7 and $11 over the next 12 months, which could mean that the current stock price is somewhat undervalued. And this is not surprising because many stocks, particularly fintech companies and growth companies and technology companies, are being hit very hard and they're drawing back. But recently, we've actually seen the Sofi stock price pop almost by around 6% recently, because in the most recent trading day, it was trading at around $4.88. And remember, that $4 to $5 range is our sweet spot for a long-term buying opportunity. And recently, it's actually outpaced the S&P 500. And again, if you want to know how to beat the S&P 500, which is a great stock market benchmark over the long term, remember to go and subscribe and watch out for the next video that I'm going to upload. Wall Street is looking for positivity in regards of Sofi Technologies' upcoming earnings report for the next quarter. Right now, the current consensus among analysts is that they're going to bring in and post earnings for a loss of 10 cents per share, which isn't too bad. However, it would represent a year-over-year decline of around 100%. On the other hand, the revenue looks very, very good, projected to come in and forecasted to come in at around $391.84 million, which would be an increase of 41.36%, which is absolutely phenomenal. Again, we are looking for companies who are going to have revenue growth of over 30% for the next decade or half a decade, and right now Sofi Technologies is clearly meeting that certain criteria. For the full year, we also have projections and estimates for professionals, which they anticipate a loss for the company of 45 cents per share and revenue to come in at $1.5 billion, which in my personal opinion makes it a very good investment right now, especially if you believe in the future growth prospects of this company, because they are supposed to become profitable in the year of 2024 at the end. In total, this would mean that their earnings as well as their revenues would have increased by around 55% and 52.3% respectively. But despite these very good financial metrics, Sofi is still rated as a hold rating among a plethora of professionals, including Zacks Rank, which currently has a hold rating on the company. But what do I think about this company? Well, I actually think it's a good time to buy a small portion of this company. If you all know me, you know I am extremely risk averse and I have a 5% rule. I don't invest into certain companies, particularly risky growth companies, more than a 5% allocation. So why do I like Sofi Technologies? And again, I only have around a 4% allocation right now because I'm going to use that extra 1% to dollar cost average my way down. For instance, if I have a $100,000 portfolio, my maximum amount of money that I'm supposed to attribute for an initial investment in Sofi would be $5,000. According to this analogy, I have $4,000 in this company and I plan to use my next $1,000 to average down my average cost basis while stocks are falling. But during this very interesting time in the stock market where everything is going down, this is where you would probably want to focus more on fundamental companies like blue chip stocks, ETFs, mutual funds, or index funds, and I'm also doing that because my portfolio is mainly made up of ETFs and mutual funds, among other things. The reason why the stock market is falling, as well as Sofi Technologies in particular, is because the Federal Reserve is increasing interest rates to lower inflation that we are experiencing, which is overall good, even though it's going to make a lot of pain in the short term over the next few years. This is one of the reasons why traders have actually turned their back on Sofi Technologies, and why I've made a plethora of videos saying that Sofi Technologies is going to decrease in price, potentially as low as $4 per share before we start seeing some upward momentum, because a lot of temporary investors like stock traders are leaving the stock right now based upon the current stock market environment and the Fed increasing interest rates, and this means that long-term investors such as you and I get to swoop in and buy these great companies for very cheap on a discounted basis. The companies overall improving their financial metrics. For instance, their adjusted net revenue has increased by 50% year over year, which is absolutely phenomenal, and they've also increased their quarter-end total membership count by 69% year over year. So this company is rapidly growing and expanding, which is just going to add to their overall revenues, and that's what I really want to see. I especially want to get my shares as cheap as possible before the company becomes profitable at the end of 2024. We even have a Bank of America analyst, which is somewhat of a Sofi competitor, Bank of America is, that reminds investors that Americans will soon have to start repaying on their student loan debt due to the student loan moratorium ending, which is going to benefit Sofi Technologies extremely well. So we could see a surge when the year ends, or even slightly before that point, because that's when the student loan moratorium ends, and that's when people are going to have to start paying back their loans, and their loans are going to start accruing interest. So if they want to refinance their loans, we could see a load of demand flood into Sofi, which is going to reflect very positively in their overall revenues. Recently, the Sofi stock price has been demolished lately, falling a very aggressive and negative amount, but with very impressive revenue and membership growth, I think it's not unreasonable to have a small portion of your portfolio allocated to Sofi Technologies, and like I said before, I have around a 4% allocation to this company. I don't find it wise to over-allocate myself to a risky single growth company, even if it's a phenomenal company. I wouldn't even want 50% of my portfolio, or even 20% of my portfolio, in a blue chip company like Google or Amazon, even though I do love those companies. So this is where we need to practice proper risk management. If you haven't taken a risk management course, or if you've never been to business school, or if you've never actually studied finance on a professional level, you're probably not aware that investors that have a proper risk management do better over the long term. And that's what I really want to push into the YouTube space. A lot of people that I've noticed, especially retail investors that are unexperienced, that haven't been in the stock market for around 10 years, really don't understand the performance benefits of diversification, a segmented portfolio according to asset class, and proper risk management. All three of those things are going to benefit you for a very large return in the future if you want to build wealth over the long term, unless for some reason you're comfortable just literally gambling your money away, betting on stocks that you think will go to the moon. So if you want to do that, go ahead and have fun, but you might have better luck going to a casino. The next story we're going to talk about is Palantir, and why this particular company has around a 26% upside potential, and does this mean that we should actually buy this company? If you didn't know, Palantir Technologies is a data analysis specialist, and they basically process large amounts of data to pinpoint various trends so they can guide that company's management so they can make data-driven decisions. And Palantir Technologies, like I said, is a big data and analytics company that serves both commercial clients as well as government enterprises. The PLTR stock is another company that has dropped very aggressively in price like SoFi, and for me personally, I like SoFi stock better than Palantir. It's a much safer investment right now, even though both of them are very risky growth stocks. So again, I do not encourage to have a large allocation to either of these companies. These are just companies that you all want updates on, and of course I'm trying to have and push proper risk management on you all because it's going to be for your benefit in the long term. Although I do like both of these companies, I do not have large allocations to either of them, and I want to be transparent with you all on that. Palantir Technologies is most known for their various technology platforms, such as their Foundry platform and their Gotham platform, among others. In this video, we're going to focus on their Foundry platform, which is used for their commercial clients, which I believe will eventually surpass the revenue basis of their government clients, even though Palantir wants to become the default operating system for their government contracts. Palantir's Foundry software is extremely innovative, but it's rather expensive because on average, the cost for its users is around $1 million per month. Many customers in this space aren't really able to shovel out that type of money for Palantir Technologies. So, what can we anticipate for the future growth trajectory of this company? Well, I still stand by my original thesis that I've had for over a year and a half, that their government platform will be surpassed by their commercial platform and the revenues that they are bringing in from their commercial segment. Now, what's really good is that their revenues have risen by around 26% year over year to $473 million. Now, this is kind of a kick in the face because originally they were supposed to meet our 30% CAGR, which is their compounding annual growth rate in terms of their revenue, but more realistic and recent forecasts for the company say it's going to change to around a 25% CAGR from now until 2025. So that is really not good, and it's technically causing some stagnation and causing their growth to stay in place and not really grow as time goes on. So this is definitely something we would want to keep an eye on. However, despite that, the trend of the overall company looks pretty positive, and I think we're seeing this decrease in their overall revenues because of the very negative economic environment that the United States is in right now, because the United States is clearly their largest customer in both their commercial segment and their government segment. Lastly, I'd like to point out about Palantir is that it's still a very expensive stock. What do I mean by that? If we look at their accounting ratios, they trade for an 8.6 times PS ratio, which is their price to sales. And even if Palantir somehow achieves a 20% profit margin, that would still mean the company is trading at around 43 times earnings, which again is very expensive. Palantir is on the verge of profitability, so to speak, because in the next 3 years, the company is supposed to become profitable by the end of 2025. This is why some growth investors and enthusiasts like myself to get this company as cheaply and early as possible before they achieve profitability, because that's when the stock price is supposed to skyrocket. Overall, Wall Street analysts are not too impressed with this company, but they do believe that the company has around 26.5% upside in their share price. Now, what I like about Palantir as well as SoFi is that for SoFi, analysts and Wall Street are very bullish on SoFi, but not so much on Palantir Technologies. So again, if I had to pick my favorite between these two, I'm going to pick SoFi Technologies, but they are both buy, wait, and hold companies and stocks as long as you get them at cheap valuations. If your average price is above $10 for either of these companies, you most likely jumped in too early on them, and you're going to have to wait quite a while before you start getting stock price appreciation. But if you're like me, I don't plan to sell my stock, and I also don't plan to average down my average cost on Palantir because I don't want to use that as an excuse and then it over allocates myself to it, which means I have a too large of a portfolio weight to this company and it throws off my risk management policies. But some really good news about Palantir Technologies is that they partnered with Concordance Healthcare. Right now, the PLTR shares have actually increased recently to $8.25, while professionals believe the company should be worth anywhere between $6 and $20 over the next 12 months. Palantir has partnered with Concordance Healthcare Solutions, which is great news, specifically as they continue to infiltrate and integrate themselves in the medical supply chain ecosystem. I want to read this, and I quote, "The two companies aim to build an ecosystem that can handle diverse data sets and disparate enterprise resource plans planning tools regardless of compatibility to create one agnostic point of reference. So let's dive into this partnership to see what it's all about. This is literally one of the best partnerships on the commercial side that Palantir has. Concordance Healthcare Solutions LLC is literally one of the largest independent healthcare distributors in the United States. And by Palantir landing this massive contract, we could see other companies in this particular space also start to sign deals with this company. I also like how they're helping this company in terms of supply chain, because the world right now is having supply chain issues ever since lockdowns and the pandemic. This is one of the world's largest problems that Palantir is uniquely fitted and suited to help and take care of, particularly in the healthcare space. So this is absolutely phenomenal news for this company. I also want to bring to your attention what the CEO of Concordance Healthcare had to say, and then the follow-up by Palantir's COO. The CEO of Concordance Healthcare had to say this, and I quote, "The launch of this ecosystem represents a vision to fundamentally change the medical supply chain at its core, and not just for Concordance, but for manufacturers, suppliers, distributors, and providers across the board. Palantir has proven to be the perfect partner to make this vision a reality." She goes on to say, "There is no doubt that healthcare providers lacking certain medical supplies and access to the appropriate data to replenish those supplies put patients' lives at risk. And we are excited to be on a mission to change that. By enhancing the visibility throughout the supply chain for all partners, the ecosystem allows manufacturers, suppliers, and distributors to better prepare for what providers will need versus react to what providers need when it is often at times too late." End quote. And I 100% agree with her. A follow-up statement by Palantir's COO said this, "Ensuring doctors, nurses, and other essential staff have the much needed supplies to provide the optimal care for every patient is exactly the type of critical problem that Foundry was built to solve. We are thrilled to be on this journey with Concordance to bring the power of data and operations together to grow this new ecosystem for the greater good." So overall, this is fantastic news for Palantir Technologies, and I really like the update on Sofi Technologies. By both of these companies have actually been lifted in their stock price recently, despite the overall economy suffering many pitfalls recently. So this is overall a generally very positive news update for both of these companies. So remember, if you want more videos on Palantir or Sofi, remember to go and smash that like button, comment down below your thoughts, and if you want to see that video next time that I sign in to where I'm going to tell you how I outpace and beat the S&P 500, which is something that 95% of retail investors and professionals can't do over the long term. So if you want to see that, I will see you here tomorrow, and with that being said, I will see you in the next YT video.